So people are dumbfounded that Tesla's stock can be worth almost as much as General Motors and Ford combined. That's right. Tesla has an $84.5 billion market cap. GM's at $50 billion. Ford at $37 billion. We hear this griping every time Tesla takes out an important level. I remember the consternation when it grew bigger than Ford, then bigger than GM. Now it's almost the size of the two of them put together. I got to tell you, I'm dumbfounded too. Dumbfounded that Tesla stock hasn't gone even higher. Why? Because the stock market loves growth, and this market in particular can't get enough of it. This is a chart of growth, people. Tesla has growth in spades. Of course, investors will pay up for it. GM has barely any growth. Ford's actually shrinking. Nobody wants to pay up for stagnation. Plus, Tesla's got a rapidly expanding business in China, which is all the more impressive when you consider that Ford's China business is in big trouble. And GM just told us its Chinese business will be down this year. Just like last year, it fell 15%. People are mocking the fact that Elon Musk did a jig last night on the Shanghai stage where he unveiled the new cars. I say you can blame him. He built a new plant that can produce 150,000 cars, and he did it in just 10 months. Ford and GM will be struggling to get that similar plant up running in 18 months. They're more in the habit of closing factories than opening them. Even better, Musk says this new plant can get its capacity up to 250,000, maybe in a couple of years. As far as I'm concerned, the guy can dance naked after those accomplishments. I don't care. More importantly, though, these kinds of comparisons between the old guard and the new ones, worthless. Wall Street will always pay much more for fast-growing companies with fabulous prospects. I remember in the 80s when Merck and then Coca-Cola, PepsiCo passed the valuation first, U.S. Steel, and then GM, Ford. We were all agog. It had to be wrong. No, it's silly. This incredible bull market that began in 1981 has been about one thing and one thing only, growth. If you have it, your stock's worth more than a similar company in the same industry that doesn't have it. Unless those growth-free companies can be taken over, then it's pretty much of a loser in the eyes of growth-oriented investors. And I don't see Ford or GM being acquired. Value investors just want the dividends, and they hope that they're being paid to wait for a turn. Crucially, value investors, they're cheapskates. That's what they are. That's why you can't compare a growth stock to a value stock. They appeal to entirely different audiences. Most audiences like growth. Now, I got really bullish on Tesla about 150 points ago when it became clear that the company can make money, maybe even a lot of money, as soon as next year. At the moment, you're getting another wave of conversion from bears to bulls. 27% of the float is still sold short, which is way too high for a company with positive earnings that can raise $2 billion if it needs it on a dime. What else made me go bullish? Elon got serious, stopped tweeting, stopped consulting the SEC. Solar business became a positive, not a drag. Someone threw a rock at the supposedly unbreakable window of a Tesla new pickup truck. It went through it, and no one cared. In fact, deposits skyrocketed. What more can you ask for? The Ford and GM versus Tesla comparison is just a parlor game. Tesla's got electric vehicles. That's the future. GM has an electric vehicle that no one seems to want. Who the heck knows what Ford's up to? Who cares? Wake me up when Tesla's double the value of Ford and GM put together. It's double. That's when I might take a pause in my bullishness. But only if GM and Ford gain in value from here. Because if they decline, a double's too easy. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.